Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.13% today. Actually had a nice rally up at the end of the day. The NASDAQ actually went all the way into the positive at the end of the day. So a little bit of a bounce off the bottom from this morning. And really, today was a day that we did some rebalancing. We use a couple of different measures to figure out when to rebalance. Number one is what's called the VIX index, VIX, and that shows how many people are, doing puts versus calls. So when the number gets above 30, which is the number that oftentimes is a good time to buy stocks, that means there's more people buying puts, which means there's more people thinking the market's going to go down. And so you look for those extremes when everybody thinks the market's going to go down, and oftentimes the market will kind of rally from there because, again, those people have all made their moves. It leaves the buyers behind. And then the other thing I look for is kind of what I call that stretch. I talk about that rubber band when something stretches way below the average really quickly or way above, oftentimes it snaps back. And there's a measure called the Wilder's RSI index. It's basically relative strength index. And when that gets below 30, that means that the stretch to the downside is pretty high. And it's, usually, again, a good time to buy. And so the rebalancing that we do, I wait for both of those in this particular case. And so that came about this morning and we went ahead and did that. Again, this is on the IRAs at this point, just because we want to be careful with the taxes. We will continue to work with the non-IRAs on a custom basis, depending on situations, what taxes somebody has and those types of things. So the idea behind rebalancing is that, especially in a down market like this, if you bought, at a higher level, and then you rebalance, you buy some more down here, and you rebalance, you buy some more down here. What you're doing is you're lowering your average cost for that particular holding. And then when the market does turn around, you get back to profitability faster. So it's better than just sitting there with that original price. You kind of just keep rebalancing and then get a faster recovery. So at this point in time, we're working for faster recovery. If we see more indications of recession, we'll work on getting more conservative with the overall allocation. But so far, I don't have those signals that I'm watching in place to make me convinced that, a recession is imminent. The economy is pretty hot. And so there's a chance that all of these different things that are pushing down on it aren't enough to push us in recession. So we need to keep watching and see what happens. Lots of variables going on with China, Ukraine, the Federal Reserve, all these things that are going on, of course. But look forward to seeing you tomorrow. I do my summary on my Talk Money with Tom show on YouTube. You can join me and watch and see what I have to say about the summary for the week at 12:15 to 1 o'clock. And maybe you have some questions. Lots of things going on right now. You can input those questions to the email, what have you. It's anonymous, and we can just answer those, for everybody. Because if you have a question, somebody else might also. So anyway, if you get a chance, love to see you on the show. And otherwise, I'll talk to you then. Thank you very much.